All right, so the carnage continues. The Nasdaq is down about 2%, and the S&P is down about 2%. Here's what we did today. So this EPAM, we did this bear put vertical. So I closed out half of the vertical. So we had sold the July 15th 310 puts for $34.70, and we bought the July 15th puts, $39 strike price. I'm sorry, 320 strike price for 39 bucks. And we closed out today for about a 69% return. Simon Properties. So Simon Properties, we put on the bear put vertical. You can see over the past 2 days, it's really come down hard. I took half off. So you can see here, we had sold the July 15th, $120 strike price puts for $7.83, and we bought the put July 15th, $125 strike price for $10.25. We unwound the position today for a 57% gain on the trade. So this is PPG. We went long puts. You can see it's having an off day today. It's down about 2.7%, approaching our break-even line. I went ahead and I closed the rest of this position. So you can see the first position we closed for about a 72% gain. The second position we closed, I had bought the June 17th puts, 125 strike for $5. Unwound them today for $7.20. Represents about 88% return. All right, JP Morgan is having a really bad day today, down 2%. The whole market is off. So JP Morgan, we put the bear put vertical. It's coming in today. So I closed half the position. I had originally sold the July 15th 115 puts for $4.85. I had originally bought the July 15th puts 120 strike for $6.68, and we unwound it today for call it a 40% return. Call it a 53% return. All right, so this morning I took off some of this bear put vertical on BK back in New York. You can see it's come in pretty hard. And this is today's date, the 12th. Yeah, we're good. So I sold half of this. I sold the June 24th, $43 strike price for $2, and I bought the June 24th, 44 strike price, $2.48, and I closed out today for about 100% gain. I'm leaving the other position open because I just think it's looking really weak. All right, so I put this this vertical spread on Citigroup, having a really lousy day today, down 11%, really getting hit. So I closed the position. So on the first batch, so originally we had bought the June 17th puts, $50 strike price for $2.87, and we had sold the June 17th $47.50 strike price for $1.86. So the first batch I sold at a 26% profit, and today I closed out the entire position for 46.5% gain on that trade. So call me crazy. I actually put a bull call vertical on FCN. This is FTI Consulting. It's popped. It's coming. It's testing its moving average. I'm thinking that this thing is going to bounce off its moving average. Maybe there's a pop here in the market. It seems like it's off its lows. I don't know, but here's what we did. So my bull vertical spread, I sold the June 17th calls, $170, so $175 strike price for $298, and I bought the June 17th 170 strike for $460. Gives me a little bit of spread here. I am down in the trade as of today, but I'm looking at the market and I'm thinking that maybe we can make some money on the upside. Okay, so here's the loser. I miscalculated on this one for sure. So This is kind of long in the tooth. Right here, when it broke above its moving averages, I thought that maybe there was going to be a rally here. I put the bull put spread on this. I needed this to trade in the green. It's expiring this, not this Friday, but the Friday after. It's way down. It's done. We lost money. So originally I had sold the May 20 120 strike price puts for $370, and I had bought the May 20 puts 115 strike price for $240, and you can see here I basically lost all my money on this trade. It happens. You have losers in there. Don't get discouraged. Last one today, I did a bull call spread on this, the vertical. So I'm thinking Monster. It bottomed out. It's been acting really well over the past couple of months. Today it's up a little bit in the down market. Okay, I'll take it. But I'm thinking that this thing is going to bounce off these moving averages and head higher. So I'm going to attempt to make some money to the upside here. So I sold the June 17th calls, $95 strike price for $1.03, and I went ahead and I bought the June 17th calls, $90 strike price for $213, and you can see here, even in the down market, we're up about 9%-ish, so we'll see how this plays out. That's all I got. There's very little, although the market is way off its lows, but very little reprieve. All right. Happy trading.